Hello, everybody. Uh, it's Pavel Kravchenko again, Distribute Lab. So we are continuing our webinar sessions, and today the topic is what's the difference between tokenization platform and the normal traditional accounting system. This topic is highly controversial, especially because of what has happened in 2017 and 18, when many people were too excited about what tokenization can bring and everybody was willing to issue a token, and there were like tokens for everything, even for like a car wash and even a kind of a coffee machine. And people thought that this is the future of money, of financing, of venture funds, and so on and so forth. It was a great excitement, and obviously it resulted in a great like disillusion when all these tokens went down at like fraction of a percent of the initial price of a sale. So today I want to cover this very quickly and move to the real differences between the tokenization platform and the traditional accounting system. So basically we start from the notion of the word token because that was the key. And people thought that tokens are a new asset class and they should be treated differently and traded differently and priced differently. There was like really a lot of models how to price tokens. I believe this is all bullshit because token is just like a thing or stuff. It's some name for anything, and you can't really combine a class of this because you can say this is the stuff, this is the stuff, and this is too the stuff. So in cryptography, token meant the some string or identifier that used to authenticate or just provide proof that you own, um, some identifier, and that's it. In real life, token meant the physical object that represented possession of some other right or the product. So the token for underground is the good example. It proves that you have a right to ride one time. So, but it's not a asset class by itself. So obviously, what you see listed on CoinMarketCap or similar websites are not really tokens, but rather cryptocurrencies, digital currencies, some digital assets, and other bullshit or whatever. So these are completely different things, and you cannot mix them together because the only thing they have in common is that they are managed via cryptographic keys, and that's it. In some, even blockchain is not used, but again, that's not the primary point. So basically, tokenization was perceived somehow incorrectly because tokenization is the process where you change the way of the medium or of accounting, but not the assets themselves. So you can have the paper to record stocks on it, or you can have a paper with plastic also to record stocks or banknotes, or you can have MySQL database or Oracle database to record securities. And now you can use blockchain to record ownership of the securities. But securities itself, they didn't change. I mean, if you're talking about the same thing, you can record them in any means. So it's just a medium of information storage and not the new asset class. So basically, tokenization system is no different from legal perspective from any other accounting system. And that's very important because many people are trying to pass some laws that are telling that for tokens there should be a different regulation. I mean, we are talking about tokens that represent certain assets like commodities or money or securities or like services. This is what tokens I'm talking about, not the utility tokens. And it doesn't really matter whether these things are represented on paper or plastic or database or blockchain. So the thing itself doesn't change the nature of it. So tokenization platform is just another way to represent to store information about ownership. And in this case, it doesn't really matter. So from legal perspective, it's the same. But there are differences from technical perspective, because first of all, and this is the benefit that wasn't like immediately explicit, is that the way of managing accounts in a tokenization system and in a traditional system are different. And difference is almost like difference between email and traditional mail. But the purpose is the same, to send information over a certain distance between sender and recipient. In email, internet is used. In traditional mail, the postman, the post, some ships, and so on and so forth. So the goal is the same, but the means are different. And obviously, emails, for many cases, 99%, are better and faster, unless you're sending physical things. So this is the scale of magnitude how the infrastructure for tokenization system and for the traditional accounting system is different. Underlying difference is that, first of all, the user is the ultimate owner of an account, and the user has a digital identity attached to him or her. And it means the key pair with public key and private key. And the private key is used to initiate transactions between accounts. In a traditional system, a user cannot initiate real transaction. They can only file a claim, and then the administrator will execute this like constructed transaction and put it into the database. Because the database inherently is not really protected in a traditional accounting systems. Whoever has the physical asset to the database or the computer can change the records. In a tokenization system, it uses blockchain, so every record is protected with cryptography, with digital signature and hashes, and so you cannot change the state of database without having the key. So that's why Bitcoin, for example, using the same principles, can be fully transparent and at the same time fully secure against such attacks. You can't steal all the Bitcoins from the database, even if you see it in front of yourself, because you need the keys of individual accounts to this. So the tokenization system uses the same principle, and in this way allows to significantly cut the efforts of ensuring the security of such a database and the whole system. That's how it's much more efficient. So basically, it solves a few tasks. First, it cuts down the expenses and it removes the middleman. In this case, the middleman is the administrator of a database. There could be many, obviously, administrators with different functions. And the second thing, and that provides the concept of open APIs to the system. So to those of you who are familiar with PSD2 directive, which tells all the European banks to open their APIs to allow third parties to manage accounts of the users on their behalf, I could understand what it means to have like PSD3, which like we kind of, that's how we explain, is that the same concept of open APIs should be applied to all accounting systems. Plus, all these APIs should be uniform, and all these APIs should support digital identity and digital signature. This is the real difference. Then you can build really secure, fast systems that are interoperable. So this is the real difference between tokenization and the real normal system, not the legal part, but the technical part, like email and normal mail. So now we come to the risks. It's also a very common question and very common misunderstanding. I remember in 2017, many people believed that the token issued on the permissionless decentralized system is much more secure than traditional database and doing it a centralized way. And I will show why it's not true in most of the cases. Again, we are talking about cases where there is a custodian of physical assets or provider of services. So first case, let's imagine the warehouse that contains grain. And now we have warehouse receipts and they're paper. If we just do them digital, like tickets, it will have limited effect. You can exchange paper because you cannot duplicate paper. You cannot copy it very easily, forge them. But you can duplicate QR codes or tickets. That's this example I provided yesterday. And because of that, you never be sure the custodian, the warehouse cannot be sure how many of these QR codes are duplicated in existence. And obviously, if some trader convinced another trader to take this receipt and pay money, and convinced that there is a custody for that, then we have a problem because now we have two people holding the same receipt, the copies, who will have a claim at some point to the warehouse. And that should not happen. So the tokenization system instead should provide the prevention from double spending. So as soon as I send in money to send in receipt to somebody else, it should be immediately deducted from my account. So it's not like with tickets right now, but rather like money. If I send it, it disappears from my account. So this is about security of accounting. But the biggest risk is not this. The biggest risk is a collateral risk. So if these grain is rotten or stolen or whatever, disappeared, then it doesn't matter where the receipt was stored and traded because it worth zero. And the biggest risk again is the collateral. So you have to trust the custodian and obviously the issuer, because if custodian says we have 100,000 tons of grain, but in reality they only have 50, you also have a problem. Again, it doesn't matter whether you issue them on Ethereum or in centralized system. So you need to trust the custodian and the issuer. And blockchain cannot solve this risk. It's about trust between people and organizations. So we don't even try to solve it. Yeah, obviously you can put some satellites that are tracking cars, that are trucks that are bringing this grain into warehouse, but it's like far beyond what we are talking today. So inherently, it should be a principle where it's single custodian, single accounting system, and single asset. Then it will be easily accessible and traceable, etc. So what does tokenization system provides is the ability to do integrity control of history of transactions plus real-time audit. These are real benefits, and they can be expressed in money and costs. So this is where the value is. The second example is with services, because the custody may not be only about goods and commodities, but about services. So who is the custodian if it's about service? Let's say we have tokenized haircuts, and one tokenized receipt is like one haircut. And if, because of quarantine, everything is closed, including the haircut studio, then the token today was zero, because again, you can't go, as you see on my face, you can't go and have a haircut. So in this case, the custodian is the haircut studio itself. You need to believe that they will reopen at some point, then these tokens will worth something. And obviously it makes sense for them to track the database of their customers. First of all, for security reasons, they're not letting their data of their customers somewhere. Second, for the accounting purposes. And third, for the convenience, they need to manage their database. If something happens, they don't have internet, they don't have access. Somebody comes and says, I have a token for haircut, but they cannot verify it. So they need to have it on their own computer. So, and there blockchain also helps, because you can have the local copy on your computer plus on some cloud. So there are many benefits, but that's much more complicated. So the conclusion is that first of all, tokenization system is no different from traditional accounting system from the legal perspective, because it's about always the provider of goods and services. And the tokenization system is just a replacement for an accounting system. So in fact, it's a replacement for paper or for database, but it doesn't change the way of the nature of the asset. So it's not an asset class. And second of all, it provides with new features such as open APIs, traceability, smart contracts, which just makes system cheaper and more functional. Again, bear in mind, example with email and traditional post. That's the scale of magnitude. So this basically, now we'll answer some questions. Who can make a token? Yeah, token is anybody can make it, but that's again about what's behind it. If it's a token for haircut, the haircut studio will do it. If the token represents money, the bank will do it. Or if its token represents like 1 gram of gold, the gold vault will do it. So anybody can issue and have its own token. I imagine that in the future, like the income of the person will be also tokenized. So I will be able to sell 1% of all my future income. Obviously, it will be traceable in digital form and sell it to investor today. If investor sees the opportunity in me, will be able to buy this 1% revenue stream from all my future income. Maybe for a year, maybe for 10 years, maybe for whole life. My friend says that's something like digital slavery, but I mean, that will happen. So again, token is it's not a new asset class. You'd better not to use this word at all. And say always explicitly, is it a stock or is it a commodity? Is it something else? So that would be it for today. Thank you for participating. I'm going to make these webinars every working day at 1 p.m. London time. So please join and share and write your comments and suggest next topics that I should cover and maybe vote for those that we suggested. Thank you very much. That was Pavel Kravchenko, Distribute Lab.